Dana, how are you?
I'm good. Thanks for having me back, Dale.
Oh,
You
good.
got me?
No, yeah, got you. Nice to hear your
Gotcha.
voice. And I believe you want to share your screen today,
Share
Dana.
screen. Gotcha. Yeah.
Okay. So,
Perfect.
uh, what do you make out of the last 3, 4 days action? I know you're macro, Dana, and it's going to take more than this type of 1 day bear raid on the market. Then it came back and NASDAQ holding up a little better than S&Ps. Anything changing in your work, cracks in the armor of the bull market?
Um, we operate mostly in what we call the intermediate term time frame. So moves that are
Okay.
on the order of like 2 to 6 months. So we had, after if we scroll back a little bit,
Yeah.
following the election last November, which was a great setup. It was one of the best buying opportunities in years. We saw a nice consolidation. We saw a nice uptick in fear leading to up to that election, which I think was unwarranted. People were concerned about, at least pundits, whoever
Mm,
those are, were concerned about, chaos after the
yeah.
election. We thought it was, from all of our analytics said it was lining up to be a great buying opportunity. We saw that historic post-election rally. So this is the value line geometric composite, which tracks the
Yeah.
median stock in the market. So we saw a historic run up into the spring. We've seen since then, we saw pretty much a 6 month consolidation. And for us, it looked like, entering October, that from an internal and a technical standpoint, we were setting up for perhaps after that consolidation, a nice the next up leg in the rally.
Yeah. So what do you make out of the market after taking 6, 8 months to create
Yeah,
enough energy for a breakout for it to be trading substantially underneath it here?
exactly. And I think that was the right read of it. We pretty much just worked off those excesses, gathered fuel again enough for the next up leg. And but a funny thing happened along the way. So we have a quantitative model that quantifies the risk in the market,
Yeah.
and most of it was bullish. We had one holdout among the indicators related to breadth, and it's one indicator that has often kept us on the right side of the market, even when other indicators go the other way. And it refused to budge to the bullish side, and has kept us hedged to some degree in during the pullback in November. And I often think about various lessons to be learned. And even after many decades in this market, I'm still learning lessons. And one lesson is always that these quantitative models that we build them for a reason, because they're smarter than we are. Even decades into in managing money, we're still subject to human nature. We're subject
Right.
to, as humans, surface level analysis, whereas a computer can instantly dive many,
So
many
where were you
layers
getting
deep.
like
So
some cautionary signals from
yeah,
that
we
model?
had one of our key indicators, breadth indicators, did not go bullish. It's kept
Right.
our model on the bearish side. I think it does eventually split bullish, and we do get that next up leg. But it gave us an indication that all was not, ready for that next up leg. And we did obviously saw that pullback in November, bit which looked like for all the world to be a buying opportunity. And if
Right.
you flip to the Russell 2000,
Right. Same
looked like
thing.
after that
Yeah.
consolidation, we had that breakout, maybe the most transparent and high profile breakout in recent memory. And we saw the rug pulled out from under it, and especially last Friday saw an acceleration of that. So
What
not
makes you think it's going to flip back to bullish here, Dana?
I think underneath the internals, which a lot of our quantitative model is comprised of breadth components, internal components, and I think the
Yeah.
foundation is solid still. On a technical basis, I think the foundation is solid still. The small caps, that value line, and the Russell 2000 is on thin ice right here from a technical basis. So we could see some more short-term acceleration downside if we do see a break here. But for the most part, you look at most of the averages, most of the indices, everything is in pretty good shape. I think
Yeah.
what happened, which often these days is the best short-term, perhaps the best short-term guide for trading is sentiment got too complacent again.
Yeah.
It bought into that October. We went right back to excessive bullishness, and that had to get reset. And finally, we're seeing a bit of a reset of that. If you look at Friday's action, we saw here, this is the term structure of the volatility market. So we saw the 1 month to the 3 month volatility market get up close to that one level. So if we see the 1 month above the 3 month, then we're seeing like a pretty good indication of investor fear. So that we're approaching the highest levels since the election last year, which is a good sign. I like to see it even higher, maybe up towards that 1.1 level, to get an indication of reliable bottoming type of sentiment, type of fear level. So at least Friday brought us along the way towards those type of sentiment readings. But that's been one of the holdouts. Even in that pullback in October, we didn't see a real spike in investor fear. We've seen a lot of complacency, a rampant buy the dip mentality. So we need to see a little bit more of a shakeout, I think, in investor sentiment to set that, that real good tradable bottom.
Okay. Any line in the sand, Dana, for when this turns out not to be a correction, but only know in the rear view mirror. But it's probably not a price point. You'll need a lot of your indicators to flip, not just one, for you to have a belief that there's problems.
Correct. And that's another lesson I've been thinking about lately is, and this years ago, or decades ago, I should say, the market changes, it's constantly changing on a micro level, on a macro level, in the long term, and in the psychology, the markets will never change. They're always driven by human nature, but on micro level, they're always changing. For example, go back to that Russell 2000 breakout again. This decades ago, you get a breakout to all-time highs, that's guaranteed money. You jump in on that,
Yeah.
and it runs and runs. Now it's more the rule than the exception that's a failure. We see a short-term fake out.
Breakout failures everywhere.
Fake out to the upside or to the downside.
Yeah.
It's the rule more than the exception, especially in an instrument, an index that's more widely followed, like the S.A.P.E. or the Russell 2000. The more eyeballs are on it, the more subject it is to false moves. So that's what we saw in the Russell. So that is right now would be one short-term line in the sand, but the market itself is much bigger than.
Is that what we got, Dana? I thought I could ask you this one. In the gold, where 2 weeks ago looked like a breakout out of a triangle, and then we negated the breakout a week later. There was
I did.
Do you know what I'm saying?
Yes, exactly. From a short-term perspective, we saw that. Here's we trade ETF, so here's GLD.
Right.
Saw that breakout. Made a nice local higher high. From our perspective, we're still in this longer-term consolidation, though. So from our perspective, it's a trading vehicle right now, and we saw that rug get pulled out from underneath the investors too, right there.
Right.
So GLD, SLV are on thin ice right here from a short-term perspective, as well as if you look at the miners, we trade again. The ETF. So you look at GDX or SLV, for example. I should say GDX or SIL. Gold miners, silver miners, also on thin ice right now. But you can see, it moved above the 200-day
Right.
average. Big deal. We're still in this consolidation here. We're in this mess. So it's a trading vehicle. Buy the dips, sell the rips. And right now, we're on potential support here.
Right.
So we took some profits a couple weeks ago, bought some back the other day. So, but in the grand scheme of things, I think it's still consolidating here. So I don't think you want to take big bets either way. But
Okay.
now that we're on gold, you're going back to GLD. I think like many assets right now, it's in general, it's in the buy the dip category
Sell the.
still.
Yeah. Okay.
I think from our longer term perspective, basically what we saw was GLD and gold back in last year rallied back up to the highs from 2011, 2012, consolidating that rally right now. So after we rallied for about 4 or 5 years, not unusual to see this consolidation. Might be forming some sort of a big cup and handle. So this is one reason I think eventually we do see another up leg here to gold, and same thing with
Wouldn't it
in the
help,
equity
Dana?
market.
Dana, wouldn't it help the case for gold? And gold actually did rally for a while with the dollar being strong. Are we getting, when you look at the dollar now from the COVID highs to last year's low when everyone came in bearish a dollar last year, wrong footed, that now we're getting into a retracement level where it's going to be an important battleground as to whether this is a bear market rally correcting that decline from the COVID high, and that the dollar could end up rolling over and failing from here, maybe at 98.
I think it's very possible. Here's the dollar index.
Yeah.
Again, everyone wants to be bullish or bearish, like
The opposite of a year ago.
Yeah, I mean, sometimes you're just in a trading market, like we've been in equities, like we talked about for the last 6-7 months, in gold and the dollar. We've been in a trading market for years now. So here's the dollar. To your point, we've basically just retraced 50 to 61% of that drop, that decline from the COVID highs. And interestingly enough, sometimes I leave these trend lines on my chart. I don't look at them for years, but lo and behold, where we stopped the other day, we saw that the underside of that uptrend line since 2011 that was broken last year came right up and hit right at, I haven't even looked at this trend line in in years.
Yeah.
Hit the underside of that, and the pullback. We also have that 61 retracement approaching up around that 97, 75 level or whatever.
That's what I'm looking for.
Yeah, pulling back right now. Probably a good support level will be around 94 to 94 and a half right now in the near term. So, but again, when you think still in a trading range here.
Yeah, and you know what? When you think about it, the behavior, a lot of people thought if you would have said at the beginning of last year that the dollar is going to rally 10, 15% this year, you would have thought that it would have been a headwind for risk, that that dollar is being bid because of risk, and the market did just fine,
right,
with a recovering dollar.
Right. Well, and again, it's one of another lesson that I learned years ago in this market, jumping into this industry, is relationships are always changing. You can't rely on
correlations. You mean?
Yeah, correlations, intermarket analysis. My thought is, it's hard enough to figure out which way one asset is moving, much less trying to figure out which way an asset is moving because of which way another asset is moving. Just to figure out, put your analysis, put your efforts into figuring out each chart, each asset on its own merits. Don't worry about the correlations.
That's a pearl,
because they're always changing. Because you look at, all right, since 2016, stocks have been pretty good, right? Since the election. Here's the dollar since 2016. Find the correlation there. There isn't one that's going to help you out, right? So, figure out, what those inputs are that are truly important to whatever market you're trading, and don't
Yeah.
worry about the relationships. I mean, some people, certainly there are investors that have systems that have methodologies that are based on that they're effective with. That's not something that's that important to us.
Okay. All right.
Yeah.
So, talking about something that's recently corrected, this pullback in energy, crude 85 to about 68 today or so. What are you thinking? Just another buying opportunity there too?
That's another asset that I think is, after a nice rally, still in an intermediate term uptrend. So this is the GSCI crude oil index, which
Yes.
we track because there's no, rollovers or anything like that. So still in an uptrend, higher highs, higher lows. I think
So yeah.
most of the inflation trade is still a buy the dip mentality, but again, it's not an own at all levels. You got to take some
Right.
profits. You got to take some risk off the table at time, and certainly Friday's plunge. Like with the equity market, I think it was a kind of a shock event, and
Yeah.
this when you get those short-term shock events, it's going to take a short-term process before you put in the ultimate
Exactly.
low, and can put in a tradable low that you can rely on. So we're going to
Yeah.
have some ups and downs in the short term. We're going to have some testing again lower before we get that the reliable, that substantial low that you can really trade against.
Yeah, that's another pearl. It's almost like being in a car wreck. The market's in shock, trying to stabilize, and the only thing that stabilizes the market is time.
Right.
So you have to give it some time to.
That's right. And one, unfortunately, one aspect of yesterday's market was that after, I looked at the term structure volatility, uh, people were so quick to jump back on the bullish bandwagon yesterday.
Yeah,
We saw
yeah,
a drop in the hedging instruments, a drop in fear, and people, especially in the options market, people are right back in buying the call options, dropping the hedges. So that was disturbing to see, and probably an indication that we've got certainly more testing, at least on the downside, which we're seeing here in the pre-market futures, and more of, especially given the breadth yesterday. The Russell was down, breadth on the
yeah.
Nasdaq was down. How could you be that confident in that in the rally yesterday? So another indication we got more testing ahead, at least in the short term.
Okay, so we're entering this period of consolidation before another wave to the upside. There's no number that you would say, this market's in trouble. Say, like if we close under 4,500.
Again, going
Well, it
back
would
to
take.
going back to another lesson. People ask me about levels on the S&P 500.
Yeah, yeah,
If you look at the S&P, it hasn't done much over the last month. But if you look under the surface, you look at the different sectors, you've seen energy stocks getting smashed. You were talking about technology before I came on, has been holding up very well.
yeah.
Financials dipping of late. There's a lot of action under the surface. So the action, the quote unquote market is a lot more than just the S&P 500.
The rotation.
Yeah. And if I could come up with levels down around 45, 65 might be a decent level. We've got that's the 38 retracement from the.
Where does your 1.618 come in at new highs above that top of your chart?
You talking about from the recent little pullback
Yeah.
up 48, 40, I guess. But if you
Okay.
look at, that's a good point. That 161 extension from that little September pullback, we stopped right there on the S&P 500, right? So
Right.
again, that's another indication we're not quite ready to for this thing to blast off. We're not hitting escape velocity yet. If you look at the NASDAQ 100, same thing, 161 extension. We stopped right there. We had that false break above there last
Right.
week. And the same thing, I believe, in the Dow. So right now, it's still a bit of a trading market. You've still got to manage risk here in the short term, but eventually, I guess this one's a little bit short, but I think we are building up to another pretty good intermediate term low and probably a new up leg in the bull market before. I think, long story short, I think we see a decent higher high before the rug gets pulled out of this
Okay.
from this bull market.
So will Santa be bringing that rally to the market, or do we wait for
I hope
the
so.
January effect?
No, I think, and the January effect starts before January, and
Yeah.
the Santa rally is really, towards the end of the year. I think we bottom before that.
Yeah.
I think, like I said, Friday's impact on investor sentiment was constructive.
Marginal.
We saw,
Yeah.
what's that?
It was marginal. They came in buying the next day. It was like it meant nothing.
Yes.
Yeah.
They've not learned their lesson yet. But
Yeah.
Friday was a good first step towards that. On a
Yeah.
technical basis,
Right.
we are. I showed the Russell 2000 earlier and the value line on a critical level right here in the short term, around 2240 on the Russell. We break this. We might be down closer to that 2110 level pretty quickly. But again, like we talked about, breakouts and breakdowns, especially on these widely watched indices like the S&P 500, the Russell 2000. Everyone knows this. So on the short-term basis, yeah, it could cause an acceleration to the downside. But guess who's watching this? Goldman Sachs is watching this. They've got, just like they were on that breakout, earlier about a month ago, everyone was watching that. They took advantage of that. They're going to run the stops here and make a killing on this false breakdown when we do have it. And we'll get, the good thing is we'll generate enough investor fear, enough panic to eventually put in that tradable low and probably kick off a decent rally. So hopefully Friday was a start to build up that investor skepticism, but we need some more on that process.
Any of the credit spreads bothering you, Dana? HYG under pretty good pressure last few months.
Yes,
and
well, that was
LQD under pressure the last few months.
Well, there's always something to worry about, and in that October rally, let me see if I can find my HYG in that October rally. One thing that we had to worry about was that holdout on our risk model that never turned bullish. Most everything else looked good. The one thing that did not look good was high yield, right? So here's HYG in October when risk assets were rallying. This thing was going straight down. So that was another red flag, another hiccup right there. That an indication that all was not in place for that rally. But so we've seen lower lows there in high yield. We did see a nice rally there yesterday. So we'll see if we do get another lower low here in the short term in equities. We'll see if the high yield, the junk bonds can hold above their low that we saw Friday, which would be the start of at least a something to start hanging your hat on in terms of the credit market.
I mean, isn't the bubble of all bubbles still debt? And and that if we start having problems, this is where you look for them first.
Yeah, I mean that's what they say. Credit's always
does that saying still hold true? Hey, Dana, let me ask you something. Does anything I've learned over the last 30, 40 years still mean anything?
Well, your experience means a lot, but as like I said, on a macro basis, the market will never change, right? It's always going to be driven by investor psychology, and human nature is never going to change, which means people like you and I will always have a job, right? Taking the other side of that. But on a micro basis, things change in
Yeah,
terms of how the market trades, and you have to change along with it. Like I said, breakouts are not guaranteed money anymore. In fact, you have to learn how to trade that. More often than not, you'll get that
fade it.
pullback to at least
Yeah,
test the breakout level or test the launch level before we really get going. So you always,
yeah.
you pick up that long-term wisdom and experience, but you're always relearning, always picking up new things on a
Always.
micro level, right?
Yeah. How many NFTs have you acquired lately?
Oh, I'm not even gonna waste my time trying to
Okay.
understand that, Mark.
All right. All right.
I've got enough.
Crypto.
I've got enough things to deal with.
How many duty coins have you
Uh,
accumulated?
Cryptos, I you if you had asked me 4 5 years
Yeah,
ago, I'm like, I'm not gonna even bother with it. But someone
you
asked me
have to.
about it, like
Yeah,
Bitcoin, like
yeah.
back in I think it was 2014. I'm like, well, I'll look at the chart, and I'm like, I was astounded that it basically, as much as anything, conforms to traditional charting
Yeah,
analysis. So I'm like, well, if we can reliably trade these things, why wouldn't we? So we do,
yeah,
we are trading cryptos, Bitcoin and Ethereum.
yeah.
Much to my surprise, if you would ask me 5 years ago. But again, they're pretty reliable trading instruments on a technical basis. So
Yeah.
that's another
Very
market that I think they're
elusive.
by the dips, right? For the
Yeah.
most part here, still in a long-term uptrend. So you got to manage them on a short-term basis,
They're
especially
very
because how
reflexive.
how volatile they are. But
Yeah,
yeah, but
yeah. Very, you're a gunslinger like you
yeah,
used 20 years ago. Well, anyway,
yeah,
buddy,
yes,
for people to follow you, and if you want to show your site and your offerings and how they could get involved with you, as I think Dana's
absolutely,
great. And it's
absolutely.
great. He's a veteran that how to become millennial.
Um, uh, yeah. So our main business obviously is our money
Oh,
management
Black Friday.
business.
Oh my God. All right.
I do have this new trading website that or subscription site that I developed about 5 years ago. Once I thought I'm going to scrap all the social media because it doesn't do anything. But then I thought, well, a lot of people are asking me to keep going, so I expanded it on a subscription site basis. So the lion's share is basically I tell you what we're doing in our management business, and you do it
Yeah,
yourself every day. So we do have
got it.
our biggest sale of the year is going on right now, which I extended one more day today for your listeners because it was supposed
Okay,
to end yesterday. So if you're
cool.
interested, go to the Lion's Share Pro or lionsharepro.com and you can check it out. Uh, Other than that, like I said, J Lions Fund Management is our managed assets business. We have another um, service for 401k investors, my 401k Pro. But this is all the information for me. You can find me
Okay,
here on Twitter, StockTwits,
yeah.
all that junk. So
So
always a pleasure.
trade with the heart of the lion, Dana Lyons.
There you go. I love it.
All right, and thank you so much, Dana, for coming here and still, so you're still sanguine. What about 2022? Will some roosters home to roost? I know you're not a caster, but it's just a vibe I have. You?
Yeah, you would think so, but the way
Yeah,
that this thing has kept going over the last
yeah,
dozen years, it's hard to pinpoint that. Eventually,
yeah,
there's going to be the mother of all, reckonings. When that is, I don't care about it right now. I'm just going to keep
yeah.
riding the flow, and eventually, that's going to be
Don't have to
devastating.
worry about it
Right.
because you'll know your work will tell you.
Follow the data, the market data. It always
Yeah,
tells you.
yeah.
Yep.
He was a great character on Star Trek. So
No,
follow data wherever he goes.
that's
Do the
right.
right thing today, and tomorrow will take care of itself. Thank you.
All right, always a pleasure. Thanks for having me on, Dale.
All right, Dana Lyons, you can follow him at Lyons Management, and um, Dana, aggressive trading year, and we'll set up a turn visit for you. So
Sounds great.
that's a
Thanks.
hey,
Thanks,
thank you,
Dale.
buddy. So wrap. Remember, everyone, to count your forecast, count blessings. I'm glad everyone saw what my ancestors looked like, Nostradamus or Rabbi. And Gorkum, Laura, John, thank you guys. And hunting the rest of the day. Be back tomorrow. The team in 13 minutes for the morning edge, and you shave before you. That's guys. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.